any Jenga piece can make this whole thing topple. Because when trust is lost, you can have as much of this crap as you want, as much of it as you want. It has no value to buy anything. You cannot buy anything with it. What has value? This has value. This has value. In gold and silver, I trust. How about saying in gold and silver, we trust? We, the community, we trust.
Despite a year-on-year decrease of 103 tons in purchases during the second quarter, net purchases by central banks worldwide still hit a record-breaking 387 tons in the first 6 months of the year, according to the latest data compiled by the World Gold Council. Lynette Zang is a distinguished financial expert who has served as the Chief Market Analyst at ITM Trading since 2002. With a wealth of experience and insight, she has become a prominent figure in the field of market analysis. In this video, Lynette Zang notes central banks' unprecedented gold accumulation, signaling concern for system stability. Gold edged higher early Thursday, extending overnight gains after being battered by rising Treasury yields and a strengthening U.S. dollar. Lynette Zang also emphasizes the role of organizations like the OECD as influential governmental think tanks. Under the current OECD framework, Franco-Nevada and Wheaton Precious Metals would both be classified as multinational corporations which operate in lower taxation jurisdictions. However, Zang highlights Moody's downgrading of U.S. banks' ratings resulting to potential financial difficulties. Moody's cut credit ratings of several small to mid-sized U.S. banks on Monday and said it may downgrade some of the nation's biggest lenders, warning that the sector's credit strength will likely be tested by funding risks and weaker profitability. The gold market is trading near session highs, seeing some modest safe haven flows as activity in both the U.S. manufacturing and service sectors contracted more than expected. Meanwhile, Zang points out the rising bond yields as a sign of underlying trouble. Just when everyone started to think no recession was coming, long-term bond yields have started climbing as traders position for a soft landing that would keep rates higher for longer. As to how much gold investors should hold, while some analysts recommend holding about 5% of their portfolio in the precious metal, Adrian Dave said that with a recession looming on the horizon, investors should look at increasing that amount. Now we are presenting you the glimpses of Lynette Zang insights from her recent video at ITM Trading. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
We have to trust that the central banks know what they're doing. I don't trust them. I've been watching central banks for, oh God, so many years. I don't trust them because I listen to what they say. I read what they're talking about, their reports, and I watch what they're doing. Global central banks are accumulating more gold than ever before because they want to retain their freedom and their power. Same reason you need to be accumulating gold at the highest levels ever, frankly. The OECD is a government think tank. More broadly, our entire monetary system is based on trust. Although British banknotes contain the phrase, and we got to hear in these banknotes too, I promise to pay the bearer on demand the sum of X pounds. This is a meaningless gesture. No gold or silver exists to back it up. Rather, like the fairy Tinkerbell in Peter Pan, who is kept alive because the audience claps to affirm its belief in her existence, it is our faith in the system that keeps it going. So please tell me what happens when that faith is gone. Because over the years, this is public trust in the federal government, and that kind of parallels the faith in the central banks. But look at from 1960, when it was at 77, to 1922 at 20. What's it going to take? I don't know. Let's take a look at what's happening right now. Because Moody's cut ratings for 10 U.S. banks and put some big names on downgrade watch. So this is whether or not or how easily they have the ability to pay their bills, pay off their debt. And remember, banks pay Moody's for this grade. So it says something. Now, this is the list of downgrades, and I don't know if you have any, if any of these are your banks, but you might want to just take a little look at this list and keep in mind that all the links are on the blog. So you can look at this more closely anytime that you want, get the images, whatever is going to work. Now, these are the banks that they have on review for downgrade, and these are the ones, the banks that have a negative outlook. So if you're banking with any of these banks, then you might want to see where they really are. But the problem is they do so much work off balance sheet, and a lot of the problem is based upon what's happening in the bond markets. And bonds, the yields have been going up substantially. Why would the yields be going up if inflation is going down? Because things are shifting and not in a good way. And so what the bond yields are telling you is there is trouble brewing. And what these lists are telling you, well, the risks may be more pronounced if the U.S. enters a recession.
During the interview, Lynette Zang expressed her concern over the declining value of investment-grade bonds, reflecting challenges in the current economic environment. The Bank of Japan also recently announced it would allow the yield on its 10-year bond to increase a bit more. If international bond yields rise, the demand for U.S. bonds may decrease, meaning the U.S. may have to offer even higher yields to attract investors. Meanwhile, Zhang asserts that the Federal Reserve's actions won't lead to a victory due to the nearing end of the fiat money system. The dollar inched lower against a basket of its peers on Monday, snapping a 5-week winning streak as investors bided time ahead of the U.S. Federal Reserve's Jackson Hole, Wyoming, symposium starting on Friday, with expectations that central banks could keep rates higher for longer. Let's get back to interview.
The markets are fighting the Fed, but S&P lowered grades one notch for Key Corp, Comerica, Valley National Bank Corp, UMB Financial, Associated Bank Corp, and it also lowered its outlook for River City Bank, S&T Bank to negative, and said its view of Zions Bank Corp remains negative after the review. Really need to take a hard look at this, because this is telling us that the system is breaking down. No doubt about it. The system is breaking down. And look, I'm trying, just like the government and the central banks, I'm trying to take out pieces that are not going to cause the collapse of the system, but I can't tell you that I'm going to be right. Nobody can. Look at this. Things that I thought would topple the system didn't topple it yet. But they will, because what we've got, and it's worse now because the interest rates have gone up, but 91% of the U.S. IG's investment grade market is trading below par. Okay, so the bond comes out at $1,000, that's par. And what they're saying is that 91% of all investment grade bonds are trading at less than $1,000. You pay $1,000 to get into it. If you're going to sell it now, you're going to get less than what you paid for it. The Fed is not going to have a victory. We're at the end of the bond of this fiat money's life cycle. Period. End of discussion. That's why so much that you see harkens us back to when we were shifting monetary systems before. 60s, 70s, 80s, the teens, the 20s, the 30s. I'm telling you, this is telling us we are at the end, and there are always things that happen, those repeatable patterns. You know, I can't guarantee what's going to happen, but I can tell you that if something's happened the same way over 4,800 times and we're doing the same thing, is this time really going to be different? I don't think so. Inflation expectations remain elevated after the Fed tightening. Wow. What is that telling us? What they monitor more than anything is confidence and expectations, because that's about perception management. And if they can get you to think a certain way, then they can most likely get you to behave in a certain manner. So the fact that they're saying here inflation expectations remain elevated after Fed tightening, the markets already know that they can't trust what the Fed is saying, and that the Fed very well may surprise them, and not in a positive way, like at all. And now what this is showing us, with inflation expectations elevated, actually, how elevated are they? My goodness, they go all the way back to when we were in the heart of the inflation scare, 2022.
In the face of evolving economic conditions, the enduring value of precious metals like gold and silver becomes even more pronounced. According to a survey published by the World Gold Council in May, 68% of central banks from surveyed emerging market economies anticipate a continuous rise in their gold reserves over the next 5 years. Do you think growing interest in these metals reshape investment strategies for the future? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.